Alright, good afternoon and welcome to our end of day review for today. And today is Wednesday, November 29th, 2013. And today we have the medium, right? So you can call medium impact new release at 8:30. 1, 2, 3, 4, 5, and 5 minutes. So if we 5 minutes, we can see that how the price range right there, right? So it's about the range is about $2. Yeah, about $2. That's significant right there to the move. So basically we have the GDP released better than expected, so 5.2. They expect for 4.9, so 5.2 is about 0.3 above, so very significant right there. Let's see the volume for today. 59 million shares, still low. For last couple of days, the volume is up low. So the volume the day before, right, we have the volume start from Monday, right, today. Good Friday right there, it's the holiday, so the volume cups, low today, pick up a little bit, and today it's more. We got a bit more. So we anticipate maybe the big move come out tomorrow, but actually today the price action very beautiful. It's a really false breakout right there. As soon as it break this level up here, we thought gonna be wow, we're gonna be go up fast, but actually it's a full breakout. This is July 17 this year. That the high, not the high, but it's the level, key level. You see that it break up there. We thought it's gonna be a breakout, but actually it's a full breakout. So most of the time the full breakout work out beautifully right there. You see this morning it come up here, before 10 we thought it's gonna be real breakout, and we did commentary on that. We said wow, it's gonna be real breakout. But that's the moment when the market is switch, right? Drop and what they call drop and switch something, I think drop and I forgot the term. We forgot the term. What's the basic idea? Alright, so how do we I think last time we did saw the pattern. It's similar. I think it's from last time when they do the FOMC relief. The best chart we get, I think there are another one in November, but we couldn't find it. But this one in October. Sorry, this one in October 11. And you see the idea right there. Is it 5 minutes right here? 5 minute timestamp. That's 1 minute timestamp. So it's the range right there. When it create, you see that? This range right here. And wait for the sell side, buy side will be rated. Then we do the full breakout right there. We see the same right there. It's not exactly, the pattern is not exactly, but it's for the main part, it's the same. But the variation a little bit different, right? So you also wait for the sell side. Buy side is rated. Then we engage. A question that we are asked this morning: how do we know when the markets shift, the momentum shift, right? We have a huge momentum up. Look at that. That's huge right here. If you put out at the close, you have a $2.69 right there, and it's all the way here, right, all the way up here to the new high 458. So it's a $3 right there. Right, but if we go to the last swing low right here before the run up, it's about almost $4.50 right there. So it's a huge run. So when the run like this happen, definitely we're looking for the momentum, exalted, or the climax. The momentum gonna shift right there. And the question we have is, how do we know? But we see the beautiful setup right here, right here at this level, or either that level, but beautiful right here. We enter at 10:02 right there. It's a short setup. And let's look at our note to see what we learn. So basically, here's here what we have, right? And by the way, this setup is look like a typical head and shoulder right here. You have a head right here, right? If someone trade the pattern, you see that the head and it's the shoulder right there. And you have this shoulder is higher than this shoulder. That means it's gonna come down very hard. Right? It's gonna come down very hard. I mean, similar pattern we see right here, right? Head right here, and the shoulder right here. So we can put in a 4 break right here, also right here, also. I mean, right here, most closer right here, and we can see that this is the bicyclic. South Saliva trap right there. Boom! It make a knot down right there. Yep. Okay, just go back to see, what is, what do we see at that moment, right? So let's see. So when we first recognize that is 1, 2, 3, 4, 5, 6, 7, about 7-minute delay right there. So basically we saw is a total shift 4 breakout short setup. The anchor candle is about at the 9:36. Where we identify the swing high with the level entry right there at 457.99, and our target is right here at this level. It's one of the total breakout level right there, and we see a risk to reward ratio of 1 to 4, right? Because if we go entry at this 457 and a target of 56, we subtract them, we have a $1.36, and we know our stop loss gonna be at this level. When the entry right here, our stop loss gonna be 458.32. If we subtract 457.99, it will be 33 cents. And then we subtract the entry with the target right here, we got $1.56. Basically, we have 1 to 4 risk to reward ratio. So it's qualified, our risk to reward ratio threshold, right? We would take the trade only have at least 1 to 2 to 3, or 1 to 3 risk to reward ratio right there. We can tolerate 1 to 2, it depends, but the ideal is 1 to get at least 1 to 3. And then to see, okay, when we see that, we say, wow, what target 1, target 2. Okay, that is our target first rate. That target hit right away at 10:20. So we're going at 10:02. The target hit at 10:20. Only 18 minutes, and we make $1.56. 4 hours right there. We can be done for today. That's awesome. Okay, a second target, which is the sell liquidity from this level, right? No, this one makes label right here. Okay, so we step back a little bit. We see how do we generalize this pattern so we can trade them in the future, right? Well, we see that the reason for entry is that there's a huge move, right? About $4 up move from the close yesterday to the new high. It's $4 and 0.74 cents. That means it's ready to shift the momentum. But how do we know that? We have a number, right? What indicator tell it? All right, and the new high, another factor that we're looking for is the new high create around 10-ish, right? Time of the day right there. But we go back to this question, I think we did raise the question, how do we know the momentum is? Right now, we just do by, discretionary, right? Use our eyeball to do that. But if we want to automate this, if we send out an alert or signal when this happens, then how do we quantify this? Okay, so we look at the way to quantify this alert, this signal, right here, which is we use the RSI, right? RSI indicator for momentum, and we can see that beautifully. So from now on, we're going to incorporate the RSI into into our arsenal, into our weaponry, our tool set right there, so we can identify the momentum shift. Because when we trace for breakout, that means a reversal, which is we need some kind of reliable, not reliable, reliable and also objective, right? Something that you can quantify, and later on you can, we can automate it, right? We want to turn our trade method or our trade pattern into a mechanic system. That's the long run. That's the long run that we're going to jump into that. Because in order to survive longer in the game, we're not going to do this day out and day in with our eyeball. We need some kind of system right there. That's our so we're going to incorporate the RSI indicator, right? And look at the note we take, right? We can say that the RSI worked very well for us right there. You see? So basically, momentum shift when the price and RSI making a diversion. Basically, you see right here, beautifully, if we apply the RSI, I think from now on we do it. You see, this one make swing high, right? And at this time, 9:36, it make another swing high, which is a high high. However, if you look at the RSI, you see the momentum is make a lower low. That means it lose momentum. And then you see when it make a new high right here, the momentum, significant shift right there. It below the 70 right there. That's exactly in the moment we're gonna go in and make a kill right there, short them. And our entry gonna be a sell stop at the last swing high right there. Everything is lined up perfectly for this setup. We really, grateful for our ability to learn and to analyze this pattern and conceptualize this pattern and we generalize them and we put into our database. The next time we will trade this. Okay, so we mark when we have the data release, we mark the buy side, mark the sell side, and we wait. If it go up, take the buy side, then we're looking for the momentum shift in order to go short. Excuse me. And vice versa. If it come down and it take the sell side liquidity, and we saw that the momentum shift by the RSI diversion, then we can go long. But another condition we need to look is that for this, for instance, right, for this case, we have to make sure that the momentum is ripe for the shipping. In this case, you know, it's go up right here. It's go up $3 or something like that, and 0.74%. That's the huge jump right there, and it ready also. And the new high around 10-ish o'clock. So that two signal that give us the moment gonna shift. What if the jump here is not enough, right? There's the jump here only $1 or something like that. Then that will give a second look right there. But next time, if we see this much of the jump high and the condition there, and those two conditions were met, and the RSI diversion, then we go in and put gonna go in and put all our money in. If that the conviction that we have, we just But anyway, that's the joke, right? We don't want to risk all on one trade, right? Anything can happen. So we just want to do what we just do. We're testing right now. We're not committing really any significant amount of money right now. We just trade one share. But that's an idea. We just try to emphasize that this is a very reliable setup. We would like to say that. But we do more experiment and more data collection in order to validate this pattern right there. But so far, for last two times we see it, it looks so beautiful. Yep. So for the target, right, if we set it right, it can go down all the way to the Friday close right there, right? You see 62. Yeah, it can go down to Friday close. Yep. Yeah, this can go down all the way to Friday close. See that? So 88, right? Yesterday it closed 48, and today it's open at 457.65. 57 15, not 55. Yep. So it's a Friday close. So we have first target is the sell side liquidity here, right? No, first target is right here, second target here, and the third target gonna be prior to close, and it hit that at 15.13 right there. So basically we have a target number 3 as 4, 54, 88. It's a Friday close right there. And yep, we have a target 2 at 455 49. Sell-side liquidity from 0830 new release move, and then the target one right here, one is at 456 43 right there. So right there, right at the level, and this guy is the level right here, and this one is target right there. So we have very good, you know, defined target right there. So next time when we see this pattern, we have a roughly idea how to anticipate and how to trade them. That's beautiful right there. Yes, basically we will okay. All right, basically like that, right? This is the 3 target right there. Let's copy and put into our note. I think this is for a target 2, right? Target 3 at yep, at 454 88. Yep. He's at what time? 15. So about 3 p.m. quarter after 3 p.m. right there. Well, if the target 3 hit, then what will be our reward right there? Our reward gonna be expansion. So basically we go right here. Okay. Oh wow, our ratio gonna be $3.09, and our risk is gonna be what? 37. Right, is that 37? Let's see what the risk we see. Let me see. No. Okay, let's do this. I think we missed some kind of that's our first shot, right? Entry. Yeah, right here. So initial risk we have right here. Yeah, we identify that. 32 cents right there. So that's what we try to show, 32 cents. So basically 32 cents. And if that's the case, then we have it before 0.32 cents, and the reward is how much? $3.09. So the risk to reward ratio gonna be okay, almost 10, right? 1:9. Okay, very substantial, very significant right there. Let's see, let's double check. So we have $3.09 divided by 32 cents. Here we correct. So it's 1:9 ratio right there. Ratio right there. Yeah. Okay. Yeah, I think we need to put that into our note. Beautiful right there. So we mark the buy sell side at a move. Wait. Yeah, when we add tomorrow here, we use the RSI looking for diversion also. That's what we need to do right there. So from product to ship, and if we see the RSI diversion, then boom, give it a very high probability setup right there. Okay, so let we load that into since yesterday we're not gonna try to load directly to the web, because just in case we need to have backup plan, right? Because this one, they don't allow, YouTube allow to save image, but now no longer. So they keep the original image, and we don't want that. We want to keep a copy of original image. Just in case we cannot have access to this server, we still have our data. We don't, otherwise we lose our data. Okay, I think we spent time enough we beat the dash horse enough on this setup. Let's go see another setup right here, and we can do the same thing, right? If we get out of here, then we can see right here any diversion. No, this is not diversion. This is about right. Okay, one more thing we try to learn that Based on the RSI, whenever it's between the 70 and 70, I mean 30, don't try to trade them. We know that this setup gonna be leading to a non-leg down right there, right? You look at it, right? You see the sell side liquidity will build up right here. Yep. And you can see the 4 breakout right here. Boom. Retest. Boom. Now like down. But basically the RSI gives us some rough idea. Okay, whenever it's in the range right here, you see, it's in this oscillator right here. In this range, don't trade them. Whenever it's break down the range, then it gives you some idea that you're going. Otherwise, avoid that, right? That can give us some indicator of whether we should engage right here. You see it? You go up here, then we can engage, right? Or go down here, we can engage also, but in this case, if we look on a chart, it don't give a confluence, then don't engage neither. Yep. All right, I think we our time's up. So let's look at the let's look at the weekly. You see the weekly right there? Wow, you see? It's green and now it turned to red right there. So we thought it's gonna be breakout. The same with the daily. Yeah, right here. It used to be ring before 10 o'clock. It's ring up here, and we thought gonna break out, but now you see, it is a 4 breakout at that level. You see, level of July right there. A 4 breakout. Let's delete some of that so we can see. Yeah, it's a 4 breakout right there. So look at this breakout level, and it's gonna come down all the way here. That is a short, my friend. All right, thank you for your time and interest. We are very grateful for the opportunity. We love what we do. Then the success will come to us effortlessly. Thank you. Bye for now.